Good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, June 7th, 2022. We finally may have gotten our answers today in that both the NASDAQ and the S&P appear to possibly have completed what I have been tracking as an internal B wave within the a little bit larger minor wave 2 correction. So taking a look here on the daily chart, we're still tracing out a larger intermediate wave 3 down, and that will eventually break into its own 5 waves of minor degree. And so I've labeled this as minor wave 1 at that low at 11,491. Off of that, we launched in a very strong rally phase, and that ended up concluding up at 12,945, but that was only wave A of minor 2. And we have been doing a lot of inside day trading type of activity, but today we opened a little bit lower, we dropped, we got close to the support levels that we had at 12,382 was the first one. And then we had a more completing one just above that at 12,490. So we didn't quite make it all the way down, but the pattern itself was 5 waves. And I will show you that by going down here to this hourly chart. And here we had A, here was the B, and then a 1, 2, 3, 4, 5. Now, what also gives a lot of support to this actually being the case, so that we finished in ABC, one was getting close enough to the support, but it was the 5 waves and that it was an ABC nature. And we had a very strong liftoff right off of that support area. But off of that low, we had a very strong lift, and that appears to be beginning to form what will end up being 5 waves up to complete wave C of minor wave 2. Now, as has been expected, that if indeed the NASDAQ was putting in a corrective minor wave 2, it needed to get this B wave complete, launch up higher in a C wave, and begin to work itself first above 12,810, which is the previous high that we had yesterday. And then again, it needs to get above 12,945. Well, today's turnaround and strong rally was definitively a very good start to all of that taking place. Now, that does not suggest that the NASDAQ's out of the woods and we're just going to rally, clean sail all the way up, because twice today we saw the market rally, create a new session high here and here, and then sell off. So we are continuing to be confronted by funds, traders, everybody who is interested in, like, we're getting out, we're done, we're exiting this part of the market, we're getting out of this particular underlying company. So we continue to see exits, but the buyers right now are stronger. So I have now labeled, actually that B wave is going to come all the way over here. Let me go back to the daily so that's going to look a little bit cleaner. So here we have it, an A and a B, now looking for a C wave. So we're back to this retracement levels, which have remained. I've removed the B wave retracement, and now we're just left with what we can expect from the total minor wave 2. Now, what I can do is I can put in, we can start to put some parameters around wave C itself. And that is by that we're going to run extensions from there to there to there. So, and what we can now see, and I'm going to drop this back down to the hourly chart so that we can take a look at those internals. And we can see that we have, I need to make a few adjustments. That's what we can see. So let's take care of that first because I want to be accurate. So that top is 945 and the middle point. So it's going to be here 945.75, I believe it was 945.25. Was it 25 or was it 75? 25. Okay, so that's good. And this low was 412.50. Let's fix that. And the beginning part was not that low, 491.25. So we get some different numbers here. So let's fix all that. And what we're looking at and going up is we have, first of all, we have all the levels that I've just discussed. We need to get above all those levels. We need to get above 12,945. Then we start to hit some resistance. We have resistance at 12,967, 13,140, I'm going to call it. But then we have the zone that I think could complete this whole picture. And that is 13,311, 380, and 438. That's the first zone. But where wave C would be equal in length to wave A comes in up here. So both of those resistance zones that we've had and carried remain in play. The first one being 13,380, the second one being 13,825. So we can see here that if wave C is going to be equal in length to wave A, that's going to bring us up to 13,867. So right in line, we're all in line here. So first zone right there, second zone right here. And the same thing's going to go with what we were looking for in this C wave down, that more importantly is going to be structure. So first of all, I do think we need to get above 12,945, which was the high of wave A. And then once we're there, we'll start to count to make sure we're getting 5 waves. Excuse me, but if we complete 5 waves down here, then wave A was the big wave, wave C going to come in much shorter, but still, what's more important is the structure itself. If we get the 5 waves, then I will begin to look for completion of that C wave. But again, we're going to be counting subwaves as well. So I think there's a very strong possibility, and that's based on the liftoff and what we kind of have going on outside of all of this with the June expiration. And remember, so much is going to be put out there by media, by a lot of pundits, and they're going to be talking about how the picture's bullish now, and this is going to be, and this is going to be, and this is going to be. And I think many times it kind of presents what I term as a false narrative. And the false narrative is exactly that. It's like, I don't want to say that it's going to be because the Fed's going to do this, or this is going to happen, or that's going to happen, but rather than, I'd rather focus on that expiration, which we've already been finding out is intending or should be larger as a quarterly expiration cycle. So last one was March, this one is June, then we have September, coincides with Fed meetings. And so maybe the Fed won't raise it so much this time, whatever the situation is going to be, but that may come into play. But more in tune for me would be what positions need to be marked or put in whatever area. And that could be all to the buy side. So again, the fact that we've kind of come down, put in what I think is a tradable low and launched off of that, it is beginning to look like that it'll be to the buy side. So we're going to be looking for equity for prices to be moving higher as everyone starts to prepare for that expiration, which will be on June the 17th. So a week from Friday. So again, but once again, we have an expiration on this Friday. So we've got a lot going on between now and then. So for tomorrow, I am going to continue for this rally. I'm going to continue to look for this rally to continue and start to break towards above today's high at 740, above yesterday's high at 810, and then begin to start to clear last Thursday's high at 12,945. And it actually was the start of the Globex session last Thursday into Friday. So once that's done, then we're in the clear to just really start to climb and get ourselves up into these zones. Again, this being the first one for completion of that C wave, and that being the second one for completion of that C wave. Once again, should the market fail from here, it's going to do it in glorious fashion because it's got to come down. Let me just open this up a little bit for us. It's got to come down and it's got to break the 4, the 8, the 50, the 20, and then the 200. So right now we're working on getting the 20 above the 50, the 4 and the 8 are already there. Once the 20 gets above the 50, then the hourly chart is in alignment, moving averages being in alignment for continued advance, continued rally. So that all remains a little bit more tilted, more positive for the market this week. So here's what we're looking for. Again, we're looking for a continuation of the upside. If the market breaks down, look for it to accelerate through these. If it's going to go, it's got to go. And so I'd be looking for this to come down here. And that's where I'm going to leave it for today. Continue to follow the moving averages, keep them in line, keep them in view. Use what we have available, which are the tools of Fibonacci, the moving averages, and the Elliott. And have a great trading day tomorrow. And that's when the next update will be on Wednesday, June the 8th.